All right, Ken Range Theory Trader back with you with another video. Just doing some back testing on the 3x3 daily chart setup. So if you don't know what I mean when I say 3x3 daily, the link is in the description. But I'm not going to just go through and describe the whole process again. Just doing some basic back testing. Like doing this just to sharpen my skills, look at entries, etc., etc. It's the weekend, markets close, so it's a good time to just get some perspective and just practice. You know, finding what you're looking for. So obviously, I'm not really interested in anything until I see the indicator fire. I do see something back here, so we'll just go ahead and start with this one. So let's remember. We always remember that the indicator fires off a possible range. We always do our look back to the prior two candles to see if it's something that we're interested in. And you just define the range, and then you look at to take trades off the high or low of the day of the current trading day, which in this case would be this one. So when we isolate the range, that looks good. Then we drop down to a lower time frame. So I'm going to go to this one on Aussie dollar. So this one would have been a qualifying range right there. Time of entries. Two possible entries that I like seeing. They are, I really don't try to trade until London because trading Asia has burned me so much. I just don't like doing it anymore, to be honest. So levels I'm interested in, obviously around the daily open is cool. And also swing highs and swing lows. So obviously this is one where Asia was actually the best entry because the money candle, which created the high of the day, was right here. So that was created at 6:35, right? So I'm not trading at 6 o'clock and then at night. That's just not happening. So if we're looking at London session, we say around 3:30 or so, which is right here. Let me see if there was a swing high that I could have gone off of. The swing high zone is what I like to isolate, and there is one right here in the 2 o'clock hour, so that looks good. So for isolating swing high zones, what I do is I just draw a box around the three candles that create the swing high if I'm looking to go short. So this is the swing high by the indicated by the indicator here. So I just draw a box and draw it out. Some boxes will be bigger than others, but ultimately, this is what you're looking at. So when we look at 3:45, yeah, no, 3:30 or so is when I at least like to start. So a good entry would have been right about here. Let's see what a stop loss would have been for that one. I try to get away with 10 pip stop losses, and yes, a 10 pip one would have worked, so that's awesome. Yeah, that would have worked out for 50 pips, so that would have been a 1 to 5 on the base position. So that's good. So you don't have to, even though I like my entries to be around the high of the day, they don't have to be. All you have to do is just catch the daily trend of the day. And if you did that here, that would have been awesome. So that worked there in terms of pyramiding. Let's see. First entry would have been there. That was at, what was this? 325. Next entry would have been at right here. That's at 405. Another entry right here at 445. Would have had a little drawdown on that one. That's four. And just say, another couple entries right there. Once the first one shows profit, though, sometimes I'll add two or sometimes even three at a time. Sometimes I'll just put all three right here, keep them close together. I'm not saying you need to do that, but I'm saying that's how I trade. I have no problem with, big swings. That's just me. So, all the remaining three could have gone like right here at 405. So first entry around 325, and then the remaining entries right in there on this big red candle close here. So that would have been good there for that trade. And like I said, when the base position reaches 5 times the risk, 4 or 5 times the risk, I'm fine with that. So from a period meeting perspective, let's say if you risk $10 on this trade here, that would have been good for $50 here. another $50 here, and another $50 here, and another 50, like $200, if I'm not mistaken. Yeah, 50, 50, 50, 50 is 200. So yeah, give or take, because obviously sometimes these lower positions may not hit 50 pips, but the base position is the main one that needs to hit that 1 to 5 risk to reward ratio. So that was cool there. So we'll get rid of that. Reset. You tend to have the most success when you just really focus on one setup. So let's go to another pair. Let's try EuroCAD. I'm just going to do a random day here. Let's just go here and see what we can see. Okay. And now let's go to the most immediate one that I find. Well, I'll try to go to a long example. So we're looking for the indicator to fire. Okay, so this range here, we got 1, 2, 3. Close. It didn't poke below the range, so I'm not a big fan of that. It did still work out, but remember, I like to see a sweep below. This range is low, so let's keep going. And you'll have that sometimes. It just is what it is. I want to focus on a long example, though, so I'm going to wait to see when the green arrow fires again. May not get one for a while, as this has a long, strong trend, so let me get out of there. Let's try dollar Swiss, just on a whim. Okay. All right, so looking for a long trend here, or a long trade. Okay, so we got an indicator that fired there. Now, sometimes there are times where there'll be a range and the trade doesn't play out until a few days later. I'm not a fan of these, but it can work. I'm just going to see how it works on this one, but this is not my ideal trading setup. I'm just going to mark this low. But yeah, see, that was, let me see, Wednesday. Yeah, it does. Let me see, make sure the range qualifies. So yes, you got 1, 2, 3 to the low. That works. So this is a legit range to trade off of. You had a few entries either here or even here. I like for them to be right next to each other, but there are times where you'll see things like this. Let me mark the high. So let me see, this was Wednesday of the prior week, and then Tuesday of the following week is when the best trade was. So let's take a look at it just for the sake of discussion. We don't need the indicator on the lower time frame. We're looking for the low of the day on Tuesday. Let's do another one with the swing levels. So on Tuesday, we're looking at the best. No, that's Monday. Let me go to Tuesday. Let me check to make sure I got the right day here. I do. Yeah, that's Tuesday. Okay. Reset. So let's see. Okay. Swing level off the low of the day was right here. See, but this is around like 10 o'clock at night. I'm not trading that. So I like to trade around like 3:30 London open. So we have a good swing range here. That's at 2:30. That's a little earlier. But you have a little good swing range here. And 3:30 might have been a little late. The best entries would have been here, like right in the 3 o'clock hour, more or less, around the range bottom. That would have been fine. So sometimes it won't be at 3 o'clock perfect. It just depends. But if you get in, let's say 3:30, small swing low there. And let me see. I doubt this went for 50 pips, but it may have. I don't know. At least 4. Let me see. You did go for 1 to 4. If you're the CRT high was the goal, you could have got 40 pips off of that. A 1 to 4 risk to reward ratio. So that's not bad off of that swing low. A little late. This one is a better one, but it's just a little earlier. But that is a swing low right there as well. Let's see, make this a little bigger with 1, 2, 3. So entry right there at 315. So entry could have been right there. That could have been entry 1. Then 2 and 3 right there. And then another green close, like, right there or so. And that would have been good for, that could have been 1 to 5 in the 3 o'clock hour. Capitalizing on the momentum off of this swing low right here, off of the candle range theory low. So there's a few ranges that are interesting. Obviously, if you can catch something off the low of the day, that's the best one. And then swing points off of the daily open is good. Weekly open is fine. Yeah, I didn't know. Okay, I didn't notice that. Yeah, this was off the daily open. So if you see a swing low off the daily open in line with your bias, that's excellent. So that worked out off the weekly open. You had a few chances to get in this, but this right here, just no, because I'm not. Now, while daily trades can play out any time of the day, I'm just not trying to trade 24/7. You lose more money than you make trying to trade 24/7. Stick with the range. So this is fine, or this was fine either way, and that would have been good for 1 to 5 on that. So let me go back out to the daily, reset that, and we'll see how it looks on the daily chart. So if you can't catch the wick down here, you should be in the bottom, near the open price, and you see price just expands all the way to the upside. So, you want to try to be in near the open price or in the wick, but all the way up here, I'm not really looking to trade that. Close enough to the range top whereby I'm satisfied. I would have been satisfied with that result. So sometimes, yeah, just, you mark these ranges and see sometimes if the trade may come a little later on. This was a Friday, this is Monday, but the real move was on Tuesday. Tuesday was the payday, but Wednesday was the range. So let's get rid of that. Let's do one more short example. Let's try a major this time. That was dollar. Well, I just did a major, so we'll do a cross. We'll do the yen. Everybody loves the yen, right? And we'll do a short. I'm looking for a short example. So obviously, the indicator just makes it quick to see a range. So we got one there. Not my speed. This one. Yeah, this one will work. This one will definitely work. Now, obviously, I don't hold trades for days and days like this. Obviously, there's plenty of upside there, but that's just not how I trade. So we'll look at the best entry on this one. Okay, so this is from so classified range 1, 2, 3 to the high. This was on Wednesday. The payout was okay. So the best entry would have been on Friday, but the payout came pretty much all next week. So let's drop down to Friday to see the best entry. We'll do our swing highs. We don't care about swing lows if we're short. Okay, we're only looking for swing highs to define a trading range. So this one was tricky because the thing is, the high of the day didn't hit until 1540. So this is one of those where you would have had to hold over the weekend to get the best entry. Close below the money candle came right here at 1550. You got to be careful with these though. Holding over the weekend is very high risk because of gaps. The market. If you've been trading any length of time, you know what I'm talking about. Where the market will gap. Sometimes it will gap in your favor. Sometimes, if it's big enough, it can gap against you and blow your whole account without you knowing anything about it by the time the market resets. So, but the best entry would have been there, right? We'll just say, for the sake of discussion, it's just a one-off. And then let's go to Friday or Monday, the next day. Okay, so there's entry there. Obviously, though, it ended green. But you see, this was our range. It barely tapped it. It tapped Wednesday's high and close back inside the range. We love to see that. So now let's take a look at this. This is Monday of the following week, and see what entries we could have gotten off of the this trading period, starting around 3:30 or so. Okay, so here we go. So obviously, best entry would have been like 7 o'clock at night, 6, 7 o'clock at night. I'm not trading that. Again, around 1. You know, for the second continuation, 1 or so. Let's see. But by the time 3 runs around, 3:30, we do have it in a range. It looks like of our swing high. So the zone for the swing high is just the top and bottom of those 3 candles. You just do that and drag it out. That's how I like to do it, And see, this was at 2:50, 3 o'clock. If you want us to start checking the charts at 3 because of stuff like this is fine. Because when you're looking for a continuation trade, the odds of this going straight down are better than the center candle. What do I mean by that? Let me show you. You see, this is the pattern that we're looking for right here. 1, 2, 3, this candle, and then this candle, that continuation candle. So when you're trying to get a continuation candle, if you did want to trade, say around 1:12, at night a.m. Eastern Standard Time, the odds are better on a continuation candle than this right here, this first candle, for continuation's sake. I hope that makes sense. This last candle in the chart right here, that one, that has the biggest odds of doing a straight drop, not this one. Because this candle here, where you actually start trading, let me go back to the daily. And I hope I'm not confusing you, but I'm going to try to make it make sense here. This one is not quite like the pattern because it ended on a green day. So let me do this. All right, so see, we have 1, 2, 3. You would have wanted to see something here, but it didn't poke above the range. So this is like an inside bar. Our trading day is here, Friday, right? So this green candle is really like this red candle here. But it's less about the day and more about the high being poked and then closed inside. But this candle can be green. Okay, this candle right here can be green, as it is right here. Okay, so this is our trading day, and then we look for a continuation, ideally to complete the range. All right. So, but again, because this poked above and closed inside, for sake of continuation, if you did want to trade Asia, or like late at night, or I'd say no earlier than 1 a.m., then that would be the day to do that right there, the continuation, not this trade right here, not the first go round. Let the market prove to you that it went above the range and closed back inside of it. Once it closed back inside the range, you expect the price to stay inside the range, and you're trying to capitalize on the momentum to the downside where it goes. Let's see here, where it does this, where it is closed, and then you just want to see it do like this and go down. Like it already did. We already saw that, but price is not breaking back outside the range. That's what happens when it goes perfectly. Okay, so let's go back. So with that in mind now, and that's the benefit of backtesting. It helps you get to your timing in relation to where you are in the pattern. So with that in mind, let's see. If we said no later than 1 a.m., this is 1 a.m. right here. With price being below the daily open, we don't really want that. Our best time frame would have been with this swing high. Right there. So an entry right here would have been fine because of the fact that we're expecting a continuation. So as soon as it's completed, 1, 2, 3, entry right there. And then another red close, would have been like right there. You would have had a little bit of drawdown because it did come back. So that's why you really got to be careful with how much you're adding in relation to your margin. So say like another one right there. And another benefit of back testing too is you get to see, pullbacks to see where your entries could be. Ideally, you want to add on candle closes. Do I always wait for candle closes? No. But should you? Yes, obviously. Okay. But then I try to do through 4 entries though. I use the quarters theory on that. But off this swing high around 2 a.m., 1:30, 2 a.m., that would have been the best entry there. And then the initial entry on Friday. And that would have been good for Well, that's good for 1 to 5. And then these right here, of course, it would have been good for another 1 to 5 if we held overnight. However, let's just say we didn't do that and made the take profit the same. This would have been good for maybe about 1 to 2, 1 to 3. Yeah, a little over 1 to 2, 1 to 2.5 or so, something like that. Because once this hits the 5, I would just close everything out and just take what you can get. So obviously it went for much more, as we see, but every trade doesn't trend so cleanly. Okay, because we don't know what the future could hold. Because like I said, we have the benefit of seeing it completed the range, but there's no guarantee of this happening every single time. Matter of fact, I can promise you it won't. Okay, we don't know what's going to happen day by day, so take what you can get. Sometimes a good take profit can just be the middle of this candle range theory, and to get that, what you have to do is just draw a fib, and at the 50% level right there, you can just take your profit right there as well, at the middle. Okay. All right, so let's do a long example, then we'll be done. Let me get out of here. So we just finished a yen, so let's try pound dollar. Why not? And I'll just try to find one. Yeah, this is good right here. Replay. Okay, so we have multiple firings of the indicator. Can be a good thing to let you know, hey, look, we're getting stronger closes to the downside. So this is actually a qualifying range, but as you can see, it kept right on dropping. But just, stay in tune with it. It's going to come back eventually. This is another qualifying range right here. You got your 1, strong close 2, and another close below at 3. So this is the range. Sometimes small ranges can lead to big moves. So we get the low and the high. This is best case scenario because price played out all in one day. But it won't always do this. But I love it when it does because you can be in and out real quick. So if you see these multiple closes, sometimes the pullback will be very sharp. This is this might have been non-farm too, because then I see it's on a Friday. But let's take a look and see what we can see. So let's get our swing lows. Yeah, it's at 8:30. Yeah, that was non-farm, but whatever. I'm not big on trading the news. Can it correspond to just kind of like complete our pattern? Yeah, but obviously the best entry would have been off of the low of the day right here, which was made at 550. This could have been your swing low zone. So if you'd have got in right at, like, say 820 or so, you could have got all of that. But good luck scaling in. That's just not possible here. If price moved just too fast. So, but a perfect entry right here would have yielded you, I mean, that's a 1 to 15. Price just shot up, off the news. So, is this going to happen every single Friday? No, because I've seen plenty of non-farms where price just spikes in both directions and doesn't do much of anything. So it's harder. I don't want to act like it can be predicted. It cannot, or at least I wouldn't try to. But every now and then, though, you will see one that plays out exactly like it, just completes the pattern. So it's either way. It's a coin flip, really. It's 50-50. So if you want to put a small amount on there, if you would have did a $10 risk on this, and hopefully the spread didn't take you out. I mean, this was 1 to 15. So even a $10 risk, if you would have made it, this could have made $150 just off one entry. You got 15 times your risk, so that was that. So again, multiple firings of the indicator can be a good sign to let you know a pullback, not a reversal, but a pullback could be coming. Reset this, do this. Where you'll see price just drop all week. This is the weekly open. So this was Monday, and then boom, 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 and then Friday just pulls back. So that does happen. So just be prepared for that. Where you get those Friday pullbacks, and sometimes they'll just drop the price. Like you have a pump and dump, but you also have a dump and pump where they dump price all week and then they pump it back up to kill anybody who went short down here. So, but those are some daily levels. Hope you got something out of this video. Definitely check out the links in the description for more trainings, and have a great rest of your day.